Okay, what is going on, everyone? Welcome back to the channel. Welcome to Dano Crypto. On this channel, we show you how to make simple, effective, and easy moves in the cryptocurrency ecosystems. We do these live streams Monday through Friday at 11 a.m. Eastern Standard Time, and we've been having a lot of fun doing it. We've been on a 60-week streak of live streaming to you guys, so we really appreciate everyone who has tuned in so far, and we want to give a shout out to any new people that have been tuning in just recently and have just subscribed to the channel. We want to welcome you. Make sure you guys are doing all the housekeeping, which is hitting the like button, hitting the subscribe button, leaving some comments, also interacting with the links in the descriptions. It's the best way that you guys can directly support the channel, and we'd love to get to know you guys and see who is who in the Dano Dojo crew. So just want to remind you guys that we can all interact with each other and get to know each other a little bit better in the Discord if you go into the Hangout and chat, and you are more than welcome to post your favorite memes. You can even post your trade setups. You can shill things. You can come in here and even post some crypto news that you might feel like we need to know about. And also there are opportunities for us to meet up whenever there are some crypto meetups and crypto events. So make sure you guys are checking that out. And yeah, it's just a good way to be a part of this crypto community and for us to become friends. So welcome, guys. We really appreciate you coming in, and let's get the show on the road today. So the topic of discussion for today is going to be about stablecoins. So this is going to be the first round of regulation, I think, that we're actually going to get in the United States, and a clear regulatory framework path and blueprint for stablecoin issuance for stablecoin backed or digital dollars that are backed by the U.S. treasuries. They're backed by U.S. dollars, but then also backed by gold as well. So there is going to be a lot of liquidity coming into the cryptocurrency markets through the modality of the stablecoin. So the President of the United States, Donald Trump, is signaling for this and giving us the kind of the precursor for what is coming down the pipe for the next 4 years and even the next 10 years of how this market, the cryptocurrency market, is going to get close to 20 to 30 trillion dollars of liquidity coming from the M2 money supply, the fiat currency in the world, where you got the yen, the won, the euro, all these different currencies. They are going to eventually be put into stables, and a lot of that liquidity is going to be then in stables, and then those stable coins are obviously going to be on chain somewhere. So let's see where that liquidity is going to lie, where it's going to end up pumping these particular protocols and DeFi narratives. Let's get into it. And just the topic of discussion is just stable coins. It might seem boring to some, but we're going to show you some charts. We're going to show you some tweets and some observations of the market that are going to get you thinking about how you could potentially generate really good passive income and yield by learning about the stable coins and the different opportunities that lie ahead for us. So let's get into it. Guys. But first, let's follow me at Dano Crypto 904. Follow me at Dano Crypto 904. This is the X account. You can watch the live streams on here as well as YouTube, Twitch, Rumble. We're streaming to Facebook, for crying out loud. So we hope you're tuning in on one of the platforms. But we are just trucking along. We're trucking along, and we hope you guys are having some fun. And my friend told me recently I need to stop saying guys so much because I'm going to offend someone. I thought that was funny. So now I'm really thinking about it too much of me saying guys. So I really need to take that out of my vocabulary and call you guys folks. Should I just call you guys? Well, folks, we're getting. I guess I'll have to figure it out, but bear with me, guys. See, bear with me, folks. Let's get into the stable coins. Hit the like button. I see we have 1 like so far. Awesome. Let's get more. Let's get more people in here. We don't want to feel like we're talking to ourselves or talking to a brick wall or talking to the air. So we got to get the community in here. We got to get the people in here. That would be cool. Okay. So let's check out the overall cryptocurrency markets for today. Let's see how we're looking on the daily. Hyperliquid got hit pretty hard, 20% down. We got Pi down 12%, Cake down 10%, ENA down 3.8%, Sol down 4.6%. But look at what's been moving up in the ranks here are the previous banger tokens from the last cycle and also from the 2023 and 2024 run-up. We got Floki up 5%. We got Pepe up 6%. Both really high, strong liquidity community tokens that are on Ethereum. Then we have this movement protocol, this movement chain. This token is in the World Liberty Financial wallet. And we're going to get into the other things that are in that World Liberty Financial wallet that's controlled by the Trump DeFi team and why we should be paying attention to these particular protocols. And so we got Sui up 4%. Speaking of Sui has partnered up with World Liberty Financial. And so there's a lot of different coins, or at least a basket of coins that the Trump team and the Trump administration have signaled that they're bullish on, and that we could see some incorporations with the U.S. government, DAOs, liquidity, maybe implementation for secure voting systems. I don't know. I mean, there's all kinds of stuff that can be used for blockchain, but really right now, the name of the game is liquidity and stable coins, because this is where we're going to basically transfer all of that fiat cash, all that fiat that's just sitting around and needs to be turned into something, into generating yield, and then also being able to use those stable coins for trading pairs and lending and all that stuff. This is where the market is headed. I know it sounds so boring, guys, but you don't realize that this is the boring stuff, the traditional finance. You have to think about how they move and where they're going to put their stuff. They want solid, stable yield that can be tracked easily over time with not as much volatility, and then they're going to then go into the next thing that brings on a little bit more risk. So this is why the regulation is going in the form of, let's get the stable coins in order, then let's see how we're going to handle Bitcoin, and then let's go down the line of how we're going to operate with the altcoins and the rest of the market. And so this kind of have to think about it in tiers. They're going to figure out the stable coins, and they're going to figure out, Bitcoin, and then they're going to just keep going down. Our job is to be there before they are. That's the whole key. Be in the places where you think that money is going to go. And there you go. All right, so Moonman Alpha said, have you seen the Proton wallet ad? No, I haven't. Should we check it out? Why should I check it out? Is there something that's going on with the Proton wallet? Let's see. Proton wallet. Proton wallet? As you just type in Proton wallet? Is this it right here? Proton wallet? A safer way to hold your Bitcoin, brought to you by Proton Privacy, open source, audited, Swiss, self-custodial, send BTC via email. Oh, okay. Interesting. Okay, Proton Wallet aims to be the easiest self-custodial solution for Bitcoin, giving users true ownership and privacy over their BTC. Learn how our wallet eliminates centralized exchange risks, keeps your keys in your hands, and simplifies Bitcoin transactions. Oh, nice. Yeah, we'll keep an eye on this. Send to Eric. Whoa, so you can just do it by email? Just send your Bitcoin, email it. That's amazing. And it's interesting because that was kind of like the true nature of how cryptography even started. It was like, how can you send encrypted messages through a system that can't be hacked or broken or messed with and can just be peer-to-peer? And that was kind of the origins of how the cryptography and Bitcoin even came to be, was how to be able to interact through these modalities, messaging, but then turning it into a means of transfer of wealth through that same type of cryptography, which Satoshi Nakamoto and other pioneers of the cryptography space ended up figuring out. And now this is the industry that we're in, spanning off of that initial idea of just peer-to-peer messaging, transfer of value, digital cash. And this is pretty cool. Yeah. So, all right. Yeah. So we'll keep that on the radar, but let's get into the stable coins. We got some things to talk about here. So we wanted to check out basically the data. I wanted to break down on how the stablecoin market has grown over the past year and how it will affect the micro prices of crypto and the macro and the micro. So the data overview. So as of March 2024, approximately 138 billion is in market capitalization growth in the trends. And then in December 2024, it reached 200 billion according to CoinDesk. And then in March 2025, it is estimated that the stablecoin market is sitting at a 225 to 232 billion. And then year over year growth, it's been around 63% increase from 138 billion to 225 billion. And this is consistent across Forbes posts, X posts. This is where the money's coming in. It's not like they're just going to immediately buy the altcoins and Bitcoin and all that. They have to get the money in there. You know, they're mostly trying to figure out how they can generate that yield with these stable coins. We're going to get into how World Liberty Financial has just launched their own stable coin using BitGo. And we have another breaking news that Fidelity is to launch their own stable coins. So do you see the pattern here? Do you see the connection and the pattern of where we're headed? So now monthly transfers, this is interesting. So approximately 1.9 trillion extrapolated from growth trends in CoinGecko. So this is a monthly transfer volume, 1.9 trillion. And then in February 2025, increased to 4.1 trillion with the peak of 5.1 trillion of transfer volume. Now, year over year, this has been an increase of over 115% in growth in transfer volume. And you see when you have USDC, Circle minting USDC, you have USDT being minted, you have Tether being minted. All that cash, what you're seeing is fiat currency, bonds, treasuries, all that stuff being converted and now going into the stablecoin market. This is going to be the play for all the banks. Think about the banks. Think of just like Bank of America, Citibank, Chase, Wells Fargo. Go down the line of all these banks that you are going to, literally, I guarantee you, by the end of the year, next year, you are going to have stable coins in a digital wallet on your online banking account. Your online banking is going to have crypto in it, just like you see in Venmo, just like you see in Cash App, just like you see all this. This is where it's headed for the mainstream, okay? This is where it's headed for the mainstream. People are going to be using crypto and not even realize they're even using it. Okay, so now active addresses. This is what's interesting is we had 19.6 million active addresses of stables, and then also increasing in 2025 to 30 million active addresses according to Forbes. And so year over year, that is an increase of 53%. So just think of how much it's going to increase in the next year, in the following year. And we're going to show you some tweets by Miles Deutscher that explains the stablecoin growth. Now, the dominant stable coins now we've seen is USDT. We just mentioned USDC. So this is crazy, guys. This is a lot of growth. Okay, so and Tether's also is so profitable. They generated revenue in the billions. So Tether grew from 100 billion in early 2024 to 139 billion in January 2025. Okay, so likely nearing 150 billion by March of 2025. And now you're seeing USDC grew from 33.5 billion in September 2024 to 52.5 billion. So big growth, possibly reaching 55 to 60 billion by March of 2025. And so this is huge. So now this is how we want to think. We want to think, how is this going to impact the macro prices for crypto? So the increased liquidity and capital inflows is the game. So the mechanism is through the Stablecoins Act as a bridge between fiat and crypto, is allowing users to enter the market without immediate exposure to volatility. The 63% growth in supply from 138 to 225 indicates billions of dollars of fiat being converted into stablecoins, much of which flows into other cryptocurrencies like Bitcoin and Ethereum. This is why we think Bitcoin will eventually reach $500,000 to $1 million per coin, because that liquidity is going to go somewhere. And because of the nature of the strategic reserves, we have breaking news that Michael Saylor is helping GameStop with their purchase. GameStop is approved to be purchasing billions of dollars of Bitcoin, and that's going to be coming down the pipe. This is going to set the stage for other companies that are on the stock market and have a publicly traded stock, that their stock is going to increase because of their nature of their Bitcoin purchasing. GameStop went up 13% just on the news that they were going to be purchasing Bitcoin. So you see the pattern here. So this is what's happening. Evidence is that Coinbase, as of April 2024, notes that USDT and USDC supply grew by $10 billion in just 30 days. $10 billion in 30 days, outpacing Bitcoin ETF inflows, signaling strong fiat to crypto movement. X posts suggest this trend intensifies in late 2024, which it did, but then also it has been intensifying into this year. So the impact on prices. So the more liquidity is key, typically drives demand for major cryptocurrencies, pushing the prices upward. Bitcoin's 50% rise from November 2024 to January 2025 aligns with the stablecoin growth post-election. So we want that stablecoin market to keep growing, because this puts money into the entire ecosystem. And also where we see the money and the liquidity go in the stablecoin, what chains are going to be holding the stable coins and holding that value and having total value locked, like increase. This is how we're going to get value propositions in the 10x's, the 15x's, 20x's for your portfolio if you're positioned well. So the correlation with bullish market sentiment with the stablecoin growth, the rise in stablecoin supply often signals optimism as traders mint stablecoins to buy into rallies, because there's more stablecoin pairs than you just going, okay, I'm going to buy this with my my dollars. Like it's not going to equate. So there's going to just be a switch of US fiat going right into those stables, and those stables being used to inject into the market. So the 30 billion supply increase post-Trump election reflects this, and the evidence is the total crypto market cap grew from 2.2 trillion to 3.5 trillion between 2024, November 2024 and January 2025. That is a 59% jump, outpacing stablecoin growth, but correlating with it. So the impact on prices, this suggests stablecoin growth is a leading indicator of broader crypto price surges, amplifying macro trends. So we have to think about the macro trend of how this is going to play out and how this is going to create stability and also mitigate the volatility over time. So stablecoins reduce portfolio volatility, encouraging institutional and retail participation. Their dominance rose from 7.3% to 12.9% of the crypto market cap between January 2022 and 2023, likely higher by 2025 given the $225 billion supply. And this is and then we got this person's OD Clarence Clarence saying, notes a 16% stablecoin market cap increase in 2025 versus a 10% total crypto market growth, showing stablecoins outpacing the volatile assets. So greater stability attracts more capital, supporting sustained price growth rather than sharp boom bust cycles. So we don't want big rips to the upside like in one day, because then the faster it goes up, the harder and faster it will fall as well. So it makes sense that we want a nice steady injection of liquidity. We want a nice steady buying and incorporating. It's just like, you know, how Michael Saylor is like, look, on Mondays I'm buying Bitcoin. And so it's just a steady pace growth instead of it being just a major swing to the upside and then a massive crash to the downside. Because we see that with meme coins. You know, we see a parabolic mega short-term rise and then we get a dump because it's just not sustainable, and when things go up it kind of must come down. So the macroeconomics factor is the interest rates and the regulations. So we've talked about this. We know that when we've had the when we have had the federal interest rates at its lowest points, basically QE, quantitative easing, then we get just more risk on activity. When we have high interest rates and not as good sentiment in the market, then I want to get the Fed interest rates. Historical federal Fed interest rate. Let's take this. And I want to show you guys, I want to show you folks how this drove a lot of the price. So we'll just go to the Fed interest, historical federal interest rates. Let's see if that pops up. Did it work? Oh no, that is not what I want. This is okay. Let's see. Let's see. Okay, there's a lot of, let's see, there's some data here. I don't like this particular one because I like the one where it was just, I had one on my chart, and let's see. So it's federal interest. Let's go interest rates. Interest rates. Man, what was the one that I had on? Because it was good. Fed interest rates, Fed interest, Fed projected interest rates. I just meant interest rates. Interest rates. Oh, I think I did USA. There we go. Okay, there we go. That's better. Okay. So here was the, okay, we have US interest, UE interest. Okay, cool. Okay, this might help a little bit, but then I need to get on the weekly. Okay. Okay. Now, do you see where when we basically were at zero interest, we were at zero interest, and we went through COVID, and we basically went super parabolic. Anytime we've had just low interest, we've just went parabolic. So we have to combine the global liquidity, the easing of interest rates, so then people can borrow cheaper money, banks can borrow cheaper debt, and then we can kind of continue that risk on, because right here we were kind of risk off, but we were kind of buying pressured, rallying up to this point. Okay. The previous cycles from the halvings have way more of a parabolic, curve than what we're seeing currently in this cycle. Because we've had small consolidations, we've had the bigger consolidation, small consolidation, and then eventually, I think we'll just kind of start to trail up into this parabolic zone. But it just all will play out with having lower interest, cheaper debt, more stablecoin liquidity coming into the markets, and this will signify our macro trend. Now, here is some observations and some posts from Miles Dorcher saying, "You're simply not bullish enough. We believe there are decades of growth ahead for tokenized assets." Now, this is another big narrative that we've been talking about, is the tokenized assets, real-world assets, and we have a couple things that we want to show you guys of how you should be positioning yourself into these markets. And so we're going to be streaming just for another 10 or 15 minutes or so on this stream, and then we're going to pop it over to the members only live stream, and we're going to be doing some Q&A and some live trading, and just having a more open-ended discussion on that live stream. So make sure you guys are going to tune into that. If you're not over there, I don't care. I will literally talk. I'm like, because yesterday I didn't have anyone to come over, but I just didn't even do the live stream. But I don't even care. If you're not over there, I'm just gonna talk to myself. I will talk to myself. I will act like I'm hanging out with myself. But if you care to join, then make sure you become a member, because right now we have 0 new members, and as you can see here, Kenneth Lodge has a amazing Pepe emoji right beside his name, and it matches really well with the green. So you get a little cheeky Pepe. You get to post some of these emojis, but then also you get to join in the second post-show hangout live stream. So make sure you guys do that, and really easy to sign up as a member. There's a couple different tiers. There's a couple different tiers, and it's super cheap. I mean, it's like cheaper than your latte or whatever coffee you get in the morning, and it's only one measly purchase a month. So after this live stream is done, you'll be redirected over to the members only post show hangout, where we're going to be doing some live trading and some Q&A. Okay, so let's get into this future prediction. So the Standard Chartered has been predicting some major macro bullishness. They think that the tokenized asset market is going to grow by 30 trillion by 2034. But let's start at the bottom. So 2 trillion of tokenized digital securities by 2030 by the McKinsey and Company. Citibank thinks that 5 trillion of tokenized digital securities are going to be in by 2030. Then BCG think 16 trillion of tokenized illiquid assets by 2030. And then by 2034, Standard Chartered predicts that we will be at 30 trillion. Okay. This is just the tokenized assets market. Okay. So the real world assets, tokenized assets market is going to be friggin' huge. And so then also, we've talked about the stablecoin growth and how this fiat money and the hard money is going to be like gold, even gold, the hard money, and silver will be going into digital forms like Bitcoin. Now, at the same time, we're going to have people holding gold strong and holding silver strong. But what do you think all of this is going to go into? Gold is only 20 trillion, but think about the US dollar. The US dollar right now is 20 trillion. The Chinese yuan is 44 trillion. The yen is 8.5. The euro is 17 trillion. The British pound being the smallest out of the 5 here, and it's 4 trillion, and then others being 13 trillion. Now, this is fascinating. I think if you think about this, Bitcoin is now 1.3% of global money. I have had this theory and this thought of thinking about Bitcoin as the representation of global liquidity and fiat currency in the entire world, because Bitcoin is now divisible in terms of has been divisible by forms of satoshis. It can be devised. It is immutable, and also it is a limited supply. So all of this is not a limited supply. They're just going to keep printing, and they'll keep printing until eventually it's got to stop, and it's going to go into something like Bitcoin, like gold, and there's no other way around it. There's no other way out of this fiat game besides pivoting and put it into something that will grow, actually grow through code. That's what's hilarious, is that through code, we are going to save the money system, basically, because there's no road that leads to a good outcome of just continuing to devalue the fiat, our currency. Our work will be devalued over time if it isn't going to go into something that is going to protect it. So you have to think about it in that way. When the work that you do and the time that you spend on earning this money, whether it be euros or dollars or yuans or yens or pounds, whatever it may be, you just need to know that it's inflating over 10% a year. And if you're not generating something of a yield or a return that is generating more than 10 to 15 to 20% a year, you are losing 10 to 15 to 20% of purchasing power and value on your dollar if you don't put it into something. And so this is what the big players are thinking. This is what the big players are doing. This is what they're doing with their actions. And so we need to be doing this with our small scale, moves, with our reserves, with our family finances. You have to just think about how they're doing it macro and break it in micro. And this is how we're going to succeed. So just signaling, World Liberty Financial plans to launch a USD one stablecoin. It's an institutional ready stablecoin. So, with the DeFi protocol, the World Liberty Financial protocol governance platform is announcing to launch the USD1, a stablecoin redeemable 1-to-1 for the US dollar. Now, this is going to be issued and minted on Ethereum and Binance Smart Chain. Now, when we talked about the chains that are going to be used to be minting these stable coins, an obvious choice would be ETH, Binance, Tron. Think about it. And think about how these ecosystems are going to grow because of the nature of the stable coins that are on the chain itself. That means it's growing the value proposition of the chain itself. It's just like Bitcoin. More money and liquidity goes into Bitcoin, chain number go up, hash rate go up. We're going to get into that. Well, check this out. Another signal that stablecoins are increasing the macro trend of a bullish market. Fidelity Investments is to launch a crypto stablecoin. So Fidelity Investments, managing over $5 trillion in assets, is actively developing its own stablecoin. As reported by the Financial Times and other credible sources, the stablecoin is intended for use as digital cash within its blockchain-based U.S. money market fund, indicating a significant move by Fidelity into digital assets. The development is in advanced stages with plans to integrate the stablecoin with transactions linked to a Fidelity money market fund. Huge, huge. $6 trillion in asset management that Fidelity has, and they are bullish on crypto and stablecoins. So it's coming, guys. It's coming. It's coming down the pipe. But all right, we appreciate you guys being here, even though we feel like we're being shadow banned. No big deal. We're gonna battle through it. You know what? We're tired of complaining, and we're just going to do the best we can because, damn it, you just got to keep going. If I keep letting the numbers discourage me, then won't get anywhere. But guys. Here's just a brief explanation of stablecoins and why reaching for the stability in the volatile market is what the traditional financial systems and the TradFi guys want. They want stability. They don't want jeetness. They don't want quick swings up, quick swings down. They want stable management. Stable management. That's what you have to think. You have to think like a boomer from the old days of how they're going to start getting into this ecosystem. So stablecoins are some of the most highly traded coins on the market, and in some weeks, Tether outpaces Bitcoin in trading volume. So what are stablecoins? So the stablecoins are a class of alternative currency that attempt to offer relative price stability. Their market value is usually pegged to a value of a stable asset like the US dollar or gold. We do have a gold-backed stablecoin. We also have a gold-backed, crypto called Paxos. These are Paxos and Paxos Gold. Stablecoins are designed to be resistant to volatility, so you won't see significant price changes. Stablecoin projects claim to be backed by a reserve asset, the dollar, and other cryptocurrency, DAI, or a precious metal. Some stablecoins use algorithms to continually adjust their price to account for demand and supply dynamics. And so the main ones that we mentioned, obviously USDT, USDT being the biggest one by market cap. So if you're looking at market cap, we have obviously USDT powers a lot of the trading and the perpetuals and the borrowing and the lending and all that stuff is powered by USDT being at $144 billion market cap. And you can see at its peak, we have seen, this is it. This is its peak. It's basically just, it's continually growing. And same with USDC. We see that it is continuing to grow and really start to add a lot of liquidity. And now we're starting to see with these other different stable coins, you got USDE. Now you have this USD1, this institutional stable coin. Lots of ways that these institutions are going to come in. So the most common stablecoin use cases is going to be the gateway to DeFi. This is how the financial traditional institutions are going to get into DeFi. They have to go stables. And then you can also be using these as an everyday currency. So if you're a small business and you want to start earning yield on your stables, and there's so much opportunity for small businesses to help themselves in this, this transition over into the digital age, is that, they could be taking full on stable coins and then using those stable coins in a separate reserve and be generating cash yield for their business. Then they could also be purchasing Bitcoin and having Bitcoin as their reserve, just like GameStop is doing. So this is how these micro things are going to ultimately blow up into the macro. You think about the internet and how most small businesses, when the internet was kind of in its infancy, wasn't really fully implemented. And then now think about a small business. You have to be like implemented where you have a social media, you have something that is fully integrated where you can have a mailing list and you can just go down the line. I mean, there's all these different things that are implemented in a small business using the internet. It's going to be the same as these small businesses are going to start utilizing these micro crypto transactions, the stable coins, and whatever it may be. And then that's what is going to eventually explode the use case. And then it's going to get into lending and borrowing, when that's going to be really when people start to learn this. It's going to be crazy because stablecoins can be also used for lending and borrowing. You can even lend out your own stablecoins and generate yield. So traders can lend a portion of their assets to a borrower in hopes of a yield after the borrowing period has ended, often secured against other cryptocurrencies. The stablecoin loans are often taken out as specific DeFi platforms might only accept stablecoin deposits. So there is going to be lots of different types of stable coins. There's algorithmic, there's the commodity backed, which is the gold backed stable coins. There's going to be, the crypto backed stable coins, which is like the on chain, like DAI. And then we have the fiat backed, which is backed by, the US dollar. And so this is where we're going, guys. This is where we're going. It's going to be massive stablecoin liquidity coming in, and this is where the money is coming from. If you're wondering, like, where is the money actually coming from, and where is it going to go first? Well, you start to see it go into the stablecoins, and if the stablecoin market is increasing, like we were just pointing out, then that's your metric. That's your key indicator that the bull market's not over. We still got global liquidity going in, and the past 4 years has just been a test, a growing test, basically a dying off of how we're going to operate completely different in these next 4 years. We've had so much stifled innovation, regulation, Operation Choke Point. We had COVID. We had Black Swan events. We had capitulations. We had bad actors. I mean, we had every possible thing to try and kill this industry over the past 4 years, and they were unsuccessful. So really, like, if you think about it, every single type of thing that they could try and throw at this industry to try and bust it and break it up, they were unsuccessful at it. So now this next 4 years is a recouping and getting back into the game. And we're seeing that the institutions, they don't want to be sidelined. They do not want to be sidelined. They understand that the name of the game now is to follow the money, and it's going into crypto. All right, guys, I think we blabbed enough on this first section of the live stream. We really appreciate you guys coming in today. If you are a member of the channel, make sure you're going to come over to this second live stream where we're going to do some live trading, and we are going to do some Q&A. So make sure you become a member really fast, because if you're not a member of the channel, you will not be able to join this live stream. So I'll give you a second. It literally takes 2 seconds. All you got to do is go to the profile here, go to the channel, and you go to memberships, and it's like $4. It's like $4. Costs like nothing. It's literally less than a latte. Lattes are like $8 now. Lattes are like $8. So this is cheaper than your favorite latte, and you literally only have to pay it one time, and you get to hang out with the Dojo crew. So I will see you guys over there. Give you a minute. I'll give you a minute, and we'll see what happens. We'll see what happens. All right. We'll see you over on the second live stream. Hey, if I'm over there by myself, I'm over there by myself. I'll just be talking to the wind. So we'll see you over there.